Hello, Michel Juvet.
Hello.
It's been a few months since Donald Trump took office, and it seems that optimism is back in the economy, so all is well?
That's correct. A lot of things has changed. It's nothing related to the election of Donald Trump, but the world is going really better. If you take the United States economy, the European economies, all indices, all surveys of confidence among corporations or among citizens are at the highest level. And even in the emerging economies, we're seeing a nice recovery thanks to the recovery of the commodities prices. So the world GDP growth will be 3.5% this year, which is an increase compared to last year. And the new thing is that we have a new inflation rate, a double compared to last year.
Donald Trump has promised a lot of changes during the campaign, but we are seeing that he cannot maneuver the way that he would like to. But can he still surprise us?
Definitely he's able to make surprises, that's for sure. But there are two reasons for surprises. One, which is very important, which is fundamental, is the fiscality. I think he's not going only to change and cut corporate taxes or consumer taxes. He wants to change the way we tax companies. Before we were taxing companies on the profits. Now he wants to tax companies on the origin of the profits, meaning companies who will import things will be more taxed than companies who will export. And that's a major change. It has never been experienced in the world. So it will affect US companies and it will affect other companies in the world. So it will be a major surprise this year or next year in the world. Now, on the other kind of surprises, we all know that he's able to be alone in deciding things and on everything which concerns geopolitics. And he's able to make big surprise on that side. We have seen that recently. So definitely we'll have surprises coming from the US.
Let's get back to Europe for a moment. What is your view on the French election?
Well, I think a lot of the worst case has been anticipated, but I doubt that the worst case, which would be a president plus a national assembly plus a referendum voting against the euro and going out of the euro is possible. I think the probability are very minimal. So nothing special will happen, but probably a little better surprise will come out of this election. I don't know which one, but it will be a better scenario than what the people think today, and probably the French market will react positively after that.
Markets are at a record high right now and seem a bit out of touch with reality. So can we expect a correction, one that has been in the air for a few months now?
You're right, and we're waiting that correction to buy at a cheaper price. It didn't come. What could be the origins of the correction? There are three reasons. The first one would be anticipating a recession, but there is no reason to anticipate a recession. We are in a recovery phase. Another reason would be a sharp increase in interest rate by the federal bank in the US. It's doubtful because there is no reason to rise interest rate now. So the third reason would be only probably, and we go back to Donald Trump, a decision taken by him in geopolitics which would shake the world. And that would bring what we call a technical correction, and then it would be an opportunity to invest in these markets.
So in conclusion, your advice to investors is to be ready, to look for healthy companies, and to invest in specific sectors.
You're right. We have to stick to the discipline, try to buy at a cheaper price. That's the first point. The second one is we prefer to invest in Europe, which is lagging the US, definitely, and the prices are cheaper than in the US. And the third conclusion is before it was easy to just buy index fund, ETFs, which is called passive strategies. Now with this world, which is really changing from fiscality to origin of growth, we need to select the best companies, and that's why we have to turn up on selecting the companies and doing what we call the active management now.
Thank you very much, Michel Juvet.
Thank you.